Hey, folks, I bet you didn't know where I went. No, I didn't go away for Thanksgiving. We moved our office, and that's what put me down for a couple of days. We still don't have internet, so I'm working off my Wi-Fi from my phone, believe it or not. So the quality's not going to be the greatest, but the installation will be on Friday. So come next week, we'll be full tilt. But if you're in need of a mortgage, we'd still love to help you. So what do we do on this channel? Why do people subscribe? Why do people watch me on a daily basis? Well, I try to give you nothing but the facts when it comes to real estate. So I'm not going to dive in the area where people talk about home values and home values crashing and all this other stuff. My goal here is to inform you guys, give you all the tools that you need to know to make the final decision for yourself, because I can't make that decision for you when the time to buy. But once you decide when it's time to buy, our goal here is to educate you on how to do the financing piece of the puzzle. But what I'd like to try to do is at least bring in context that's in the mainstream media so you can look at what's actually going on in real estate. And I'm going to give you my side of the equation, because think of it. When you're clicking through some things, or you're looking at websites, or you're looking at even YouTube channels, why do you click the video that you want to see? Well, the thumbnail's intriguing and the title might be really cool, and you're like, hey, I gotta see it. And then you click in and it's the same humdrum stuff that you're used to kind of seeing on every other channel. But here we want to dive in and really explain to people, if you're looking to buy your first house, what do? What are the steps involved? Do you reach out and get a realtor first? Do you, check and see what you qualify for? Do you do this? And that's why we do this. So if you're wanting to check out all the questions that people normally have when they're buying their first house, check us out tonight. We have a live YouTube event, me and Kyle, this evening. It's going to be 5 o'clock Central Standard Time, 6 o'clock Eastern. And it's basically for all those with first-time homebuyer questions to get those questions answered. So let's get over to what's going on in the news today. So the recent news that we just saw out said the Case-Shiller Index, and everybody's going to say, we'll see, house prices are plummeting and all the other stuff. So let me go over to the context of where house prices are right now, just to give you the facts behind the thing. It says the Case-Shiller National Price Index continues to decline to 10.6% year over year increase. Continues to decline, but we have a 10.6 year-to-year increase. Okay, so let's put this into context. House values are starting to come down a little bit. Are they crashing? No, they're actually down just maybe 5-6%. The consensus is the market's going to correct maybe nationally in some specific areas that really saw robust growth. It might correct about 20%, okay? And I talked to some home builders this weekend, and I talked to some actually CEOs of different companies and things, and they all have basically the same context behind it. They're not worried about a huge crash, but just a correction of about 20%. For those out there that are saying, okay, 20% isn't basically a correction, well, you might want to go back and do some of your studies, because we saw parts of the United States just this year alone, just this year so far, up over 20%. So a 20% retraction is just basically putting an adjustment back to where we started this year. Okay, so that's that part of it. You can read all through here, but just to get the context here, you can see how it continues to decline. That catches your attention. But then the next thing it says is they're up 10.6% year over year. Did you know the national average throughout history is between 3 and 5%? So 10% in 1 year is still fantastic, especially what we saw this year. So what did we see at the beginning of the year? Well, we saw mortgage rates go from basically 2.5% to 7%. Okay, and we saw house values increase substantially, but now they're starting to come back down. But that interest rate is really killing us. So for a lot of those naysayers out there that have been preaching, the world's going to crash in 2021, and then in 2022, and now you're going to start seeing all these headlines saying, well, we're on our final leg of the crash. Well, how long is it going to take? If I make a prediction, I'm not, I want I want my stock analyst to tell me what stocks I should invest in now. Not ones, what's going to happen 2, 3, 4, 5 years down the road, especially with housing. So I'm going to put some of this in the context, because if you would have bought a year ago, where those numbers would have been while everybody's preaching the world's ending, where you would have been then versus where you are now if you didn't buy. But again, I'm not saying you have to buy. I just want to show you, if you're on that bandwagon of saying, the world's going to end and everything else, what you missed out on. Okay, so that's that first. But the house values are starting to ease a little bit, but you're not seeing a crash. Another part of the market is people are saying, and you see these headlines, let's look at the headlines here, is foreclosures rose over 50% from 2021 to 2022. Are you kidding me? Well, when you have a foreclosure moratorium on and you can't foreclose on anybody, it really makes it tough to use previous numbers to kind of explain current market numbers. Do you get what I'm saying? So if basically you went from 1 to 2, that's a 100% increase. Okay, so I hope you get what I'm saying, but you can see right here, October foreclosure activities were about 59% of pre-pandemic numbers. So we're at 59% of where foreclosures are normally in a normal market. Okay, so I can't really say that foreclosures are running rampant if we're basically at half where we were in the normal environment that we usually see. Let's get over to the economic calendar. So we're going to put some of this into context. Now you can see why people are getting a little squeamish right now, if you're not already. Look at just what we have in the data that's provided for us yesterday and today. So far we had the consumer, this consumer confidence level. It was 102 previously. Now it's 100.2. Don't really know what that means, but it's not good, guys. Confidence is eroding. Then you go over here, the ADP employment numbers. Now remember, the federal government or the Federal Reserve said we're out to really put pain in the market. We're here to really crush housing and to increase the unemployment rate. Okay, so they want more unemployment because why? Well, people are spending way too much money driving up the cost of goods. I still blame it on the Federal Reserve and the federal government for sending out so much in stimulus checks, and now it's coming to haunt us. But let's look at some of the numbers that's showing up right now. We have the employment numbers. They're crashing. There was 239,000 jobs created at the last report. There was supposed to be 200 this time. It was half of, just a little bit less than half of where we were just last month. So it's taking a chunk out of the employment market. GDP, I'm not even going to look at that because it doesn't seem like really anybody cares about the GDP today. You got the JOLT index. Now, this is the number of job openings, okay? There's still 10.3 million job openings. So my concern is, or I guess my question is, how is the Federal Reserve actually trying to increase the jobs numbers or the unemployment rate when we have over 10 million job openings and there's still a disconnect on there? On my way to work every day, I go past manufacturers. Every one of them, I can honestly say, has a help wanted sign. Okay, so there's a huge disconnect in the working part of this equation. And then we go to crude oil. Look at crude oil. We are negative 12 million barrels. We were negative 3 million previous reading. We're supposed to be negative 2 million now. We're about 6 times that amount. So you're starting to see all of this starting to implode. So the expectations now, if you're not saying that we're in a recession now, well, almost every economist is predicting it in Q1 or Q2 of 2023. So what normally happens during a recession? Well, the last 5 recessions that we had, we saw a 1.8% reduction in mortgage rates on average over the last 5 recessions. And all the last 5 recessions that we had, every one of them came with a reduction in mortgage rates. So just using that for context. So let's get over to where mortgage rates are today. Here's where they are, or basically here's where they started the day. You can see these are the top 6 products people use when they're buying or refinancing their home. These are the top products right here. These are not my rates. These are not any individual bank's rates. What these are the national averages. So what Mortgage News Daily does is they surveyed mortgage lenders all over the country and said, if you had a client with this criteria, what would your rate be? So this is the national average. Again, it's not my rate. What rate can you get? Well, I'm going to explain to you at the end of the video how you can reach out to us, even if you have a quote right now, and we can check that quote against 85 of the country's largest banks and lenders, because that's what we can help you with, trying to find that best rate, the lowest fees, and make sure you're in the right program. That's our goal here. So the next thing in the puzzle is what we monitor also is what's going on, or what's the projection of where mortgage rates are going to go. So to do that, what we do is we follow the MBS market. It's the mortgage-backed securities market that trades on Wall Street. This is a bond that trades on Wall Street. What you're seeing on your screen right now is the price of the bond. Okay, so how this works is if the price of the bond goes down, okay, what you're seeing on your screen, that means rates are going up. There's an inverse or a flip-flop effect with the price of a bond and mortgage rates. So this is telling me mortgage rates are going to creep up just a little bit, not a lot, but probably tick up maybe 0.02, 0.05 ticks. So if we go back to the Nifty rate sheet, you're going to probably see rates at about 6.7%. It's still a far cry from where we were. We were at 7.37 not too long ago, so I'll say 7 3/8, and now we're at basically 6.75. So we're about 0.5% or more off of where the rates were at the peak. So what do you do if you're out there and you're looking to maybe get qualified for a mortgage or to find out what kind of mortgage you qualify for? Well, that's a great thought there, but let's hold on a second. Let's go back and say, well, remember I kept watching all those videos and people kept saying, don't buy. The market's going to crash. Everything's going to crash and everything is bad. Okay. Let's just amuse me on this one. Let's go back in time and say, well, if I would have bought my house then, what's the difference of where it would have been then and now? So let's just go back to last year at this time. Let's say I'm going to buy my first house and it is $250,000 is the purchase price. I'm going to put down 3.5%. And the rate at that time was 3,000 or 3%. So if you scroll down through here, I'm not going to take my head out of the equation because I want you to see this. So we're going to round that number to your payment would be $1,600. Now, what I want you to understand on this is once you close on that house, your payment's probably never going to change. Okay, unless you escrow your taxes and insurance as a part of your payment, which you can elect to do. So as your taxes go up and down, that'll affect your payment. As your homeowner's insurance goes up and down, that'll also affect your payment. So, but if you look at this just on the principal and interest side of the equation, your payment will never change. Okay, so let's say in this case, this includes taxes and everything else, but let's take that out of the equation. Hold on, let me go back through. Advanced settings, we go to advanced settings, and you can do this. This is on my website that we're doing this right now. Just go to therateupdate.com and click over to calculators. So your payment would have been principal and interest, $1,228, okay? So now house prices have gone up, let's say 10%, because they've gone up 10%. So now this new house value is $275. Okay, you got some appreciation there, raising that payment up. But let's see. Now today's rate is 6.625. Now the payment is $1,931. So just for waiting, your payment went up $700 to $800 a month. Okay, think of that month after month, year after year. How much that adjustment's going to make. Now, let's say on the flip side of this, you rented. Okay, your rents are going up on the pace right now, currently of about 18% a year. That's going to taper off to about probably back to 5 or 6%, maybe 4%. But again, over the last 2 years, let's say you didn't buy last year, you were looking to buy last year and you didn't. Your rent's probably going to go up 6, 7, 8% this year, another 5% next year, another 5% the following year. So I hope you get it. So please don't go off the advice of the YouTubers or mainstream media. Please make sure you do your own homework before you buy your first home. So how do we help? What do I do? Well, I'm a mortgage advisor. I'll put it that way. I work for a bank. We are federally chartered, and we are also set up with 85 of the country's largest banks and lenders, mortgage companies. So what we do here is you can come to our website, and it's therateupdate.com. It's right here. We offer a free service, one of several that we do. One, if you want to apply for a loan and get pre-approved today to buy your first house, maybe in January, February, March, or at least start kicking the tires, all you need to do is give us a call. Can't see that there, but it's 844-775-5626, and all this information will be down below in the description. You can apply today. But what I'd like you to do is either call or schedule an appointment. Okay, you're just going to click book a meeting. Then you'll have your one-on-one consultation with me or one of my mortgage advisors to kind of answer all the questions that you have. And again, don't forget our live video tonight. We do these every Wednesday. We have a Q&A session live, Kyle and myself. Check out Kyle. He's on Kyle Seagraves. He's on Win the House You Love. You can check that out. But another way we do this is if you're in the process of a mortgage right now, and you called a couple places and you felt comfortable with this one place, or maybe didn't feel comfortable, but they were able to help you and you started moving through. Now rates might have went down a little bit. You can see on the mortgage rates that we just went over, they're down about 0.5% or 0.75% where we were. Let's say you're locked in and you can't do anything. Okay, so what do you do? How do you find out if you got the best package deal? Well, the best thing to do is use our free service. All you have to do is click right here. You're going to click this loan estimate tab. What this is it's going to open up this tab right here. What you're going to do is if you get a loan estimate. Now, what a loan estimate is if you applied with a mortgage company or a lender or a bank or whatever, after 3 days, they have to disposition your loan. They either have to turn you down or they have to approve you and move forward. If they approve you and move forward, they're going to send you a loan estimate. It's in your package. It's going to go over the rate and all the fees. Well, instead of getting completely confused with it, all I need you to do is go to this website, click that, and fill out all this information. There's not a lot here. Basically, it's pertinent information on how you want us to get back to you, but you're going to drag and drop your loan estimates right into here. What we're going to do, give us a couple hours to review that, and we're going to respond to you to see if we can get you a better rate and better terms. But what we need from you is you got to let us know how you want us to reach out to you. So my name is Dan Frio. I do the rate update every day. Please, if you like our videos, don't forget to give us a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. And don't forget to join us tonight at 5 o'clock Central Time live on this channel. You can ask any questions that you have in regards to buying your first property. So God bless, guys. Thanks so much for watching. I'll see you later this afternoon. Bye-bye.